Buying a home today is almost impossible without major financial sacrifices. And with skyrocketing home prices and stagnant wages, the dream of home ownership is becoming a financial nightmare for many. According to a recent survey, 43% of new homeowners, they're struggling to afford their homes. This statistic underscores the financial strains many face right from the start. So if we don't address these challenges head on, more families will find themselves trapped in homes they can't afford, leading to financial crisis and regrets. So today we're going to explore why so many homeowners are in over their heads and what you can do to avoid these common pitfalls. Now, just the other day, a realtor friend of mine was telling me about a buyer who bought a home 5 months ago, and after losing 8 homes just to get their home that they wanted, they bid $40,000 over the highest bidder, and now they regret it. They just got caught up in the process. They just want it to be over. So I don't want that happening to you. And on my watch, I would not allow that to happen to you, to buy over your means and find yourself house poor. So before we get started, if you're new here, don't forget to hit that subscribe button and click the notification bell so you'll never miss an update. I'm going to bring you valuable insights on real estate trends and home buying tips and a lot more. So let's get started with some shocking survey results. This company called Clever Real Estate, they performed a survey called the American Home Buyer Report, something like that. And they surveyed about 1,000 people who bought homes recently in 2023, 24, and the results were quite surprising to me and somewhat little disappointing. So I'm going to dive into some of the key findings. I want to say that this is really a 1,000 people sample. Is that enough of a sample of the thousands of home buyers who bought a home in 2023, 24? So although these statistics are a little frightening, remember only 1,000 were surveyed. So the first statistic is that 43%, we said this earlier, of recent home buyers are struggling to make their mortgage payment. It's a challenge every single month. Now the statistic underscores the financial strain that many are under right from the start. And with the mortgage payments often being the largest monthly expense of any financial hiccup can make it hard to stay current. Next, I want to talk about regrets, because this survey found that regrets are common among recent homebuyers, with 82% expressing at least one regret about their purchase. The most prevalent regret, they said, was they spent too much money on their home. They got caught in the overbidding, as I mentioned earlier, in a competitive market, and they underestimated ongoing costs, and they failed to consider future financial flexibility. The next statistic I thought was pretty interesting is that 44% have taken on extra debt now. If you're buying their home, nearly half of the new homeowners have incurred additional debt just to maintain their lifestyle. This maybe is like a credit card or a personal loan, or they dipped into their savings, which they really didn't want to do. And that can lead into a cycle of debt that becomes increasingly difficult to manage. Next, 47% feel financially overextended, with almost half of new homeowners feeling that they are over their heads since purchasing their home. So it can be a little overwhelming, and it can stem from a combination of not only the high mortgage payments, but the unexpected maintenance costs and also the rising cost of living, which has been really a challenge these last 6 months. That's another topic we can talk about another day. Now, the next statistic they found is that 35%, more than a third, they just weren't informed about the maintenance needs. The seller, they said, weren't upfront about the amount of maintenance the property would require. Well, that lack of transparency, well, that can lead to unforeseen expenses and headaches. As new homeowners, basically, they discover issues that need immediate attention. They didn't know they were going to happen. See, when our clients purchase a home, we investigate the expenses. We don't just take whatever the seller says. We make sure the seller gives us the bills, approves their maintenance expenses. As most agents, after writing up 8 offers for a client, they're just happy to be able to get paid. And it might cloud their judgment a little. And they don't have many systems, I find, built into their business to get this valuable information so their clients can make good decisions. So you want to make good decisions, right? So when you're buying a home, let's make sure you get all the proof from all the expenses required to maintain the home. No matter what we have to do, we have to get that. It's very important. And if the seller's not willing to give it, let's move on to the next home. So why are buyers having difficulty in keeping up with their payments? Well, for one, they came up and they found out that there's a gap between salaries and home prices. It's a major barrier to affordable homeownership. So I really want to break this down a little bit further. A clever analysis from this real estate survey revealed that to comfortably afford the median home price, say of $332,000, with a 10% down payment, first-time buyers need to earn about $107,000 per year. Now, however, the typical household income in the United States is only like $75,000. So that's a substantial gap, and it highlights this financial strain placed on the average buyer trying to enter into the market. So that's one thing. Next, there's a historical perspective on home prices as well, and inflation, because since the 1960s, home prices have increased 2.4 times faster than inflation. If home prices had only kept pace with inflation, the median home would only cost about $177,500 today. But instead, the current median home price is about $431,000. And over the past decade alone, while inflation increased by 31%, home prices soared by 63% and doubling in many areas. And that's been happening here in Philly and the burbs for sure. So, what is different now for buyers in this generation, the millennials versus, say, the baby boomers? If we compare the experience of both of these different generations, the boomers versus the millennials, you can see there's a growing challenge faced by today's homeowners. Well, the first thing is that home prices relative to the income aren't keeping up with that. Like in the 1980s, when baby boomers were in their 30s, the median home price was 3.5 times the median household income. Fast forward to now, millennials in their 30s are facing a median home price that's 6.3 times their household income. That's a stark difference. And it kind of highlights how much more difficult it is for these millennials to afford their homes without stretching their finances to the limit. So next, I want to consider the rising costs of homeownership, because these ongoing costs of owning a home can significantly impact financial stability. And I kind of tipped on that a little bit, but I want to take a little bit of time and talk about the insurance costs and how much they've been rising. These costs have risen sharply. According to S&P Global Market Homeowners, insurance rates rose by 11.3% nationwide by the end of 2023. But in states like Texas, Arizona, and Utah, these increases were even steeper, reaching up to 23%. This increase adds a considerable amount to the annual cost of owning a home, something you may not have thought would happen and maybe didn't plan for it. Besides homeowners insurance, we have escalating property taxes. Not so much here in Philly and the burbs, but I heard in other areas property taxes have seen significant increases. Since 2019, property taxes have risen 25% across the country, depending on the local tax assessor schedule in your area and the method of reassessment. Your property taxes could increase substantially. And that really is a strain on your budgets, because there's two things you can't control: the property taxes that go up and the homeowner's insurance. Otherwise, your mortgage payment stays the same. One of the things that we go over with our buyers is letting them know you have to plan for these increases. Can you afford that? Is your income going to go up as well as these taxes and the homeowner's insurance? That's one thing to think about. Not only affording, can you make that payment now, what happens when you have those increases? And that's really important to make sure you can afford that. So what tips do I have for new home buyers? Well, in order to navigate challenges, I'm going to give you a couple practical tips. You may have heard of these, but one is, like I always do and tell you to do, is do your due diligence. Understand the total costs, like I talked about earlier, maintaining the home. Like I said, we're going to ask the seller, get detailed information about utility bills, maintenance costs, other recurring expenses. You can also contact utility companies directly to get accurate estimates. It's a proactive approach, and it helps avoid unpleasant surprises and ensures you're prepared for the ongoing cost of homeownership. And that's something we do for all of our clients. Next, you might want to build an emergency fund before you start looking for a home. It's essential to make sure you have this. Aim to save maybe 3 to 6 months of your income to cover unexpected repairs or financial setbacks. It's a financial cushion. It can be a lifesaver if you can, or especially if something happens like a major home repairs or temporary income loss. Now, when you buy a home, we always look at the roof, the heater, windows, these major items that could go wrong, and make sure we budget for it. That's very important. We have this great budget worksheet we can turn you on to. If you want a copy, just let me know. Just put a comment below and I'll send you one. Third thing you want to do is maybe understand your mortgage. Like I said earlier, remember your payment includes more than just principal and interest. You got this homeowner's insurance, you got these property taxes. They're going to increase over time. Like I said earlier, make sure you understand all your components of your mortgage payment, plan for potential increases. So, but Diane, maybe I'm already struggling. Well, if you're already finding it hard to make these payments, consider a couple options. They were doing a lot of this during the COVID time. One, forbearance. It allows you to temporarily pause your mortgage payments. It can be a suitable option for short-term financial hardships. However, it's important to remember that you'll have to repay those missed payments eventually. There's a lump sum or by extending your your loan term, right? The second thing you could do is a modification. If you experience a permanent loss of income, you can request a loan modification to lower your monthly payments. And this might involve negotiating with your lender to change the terms of your loan, such as extending your repayment period or reducing the interest rate. That's also an option as well. And the last thing I think you could do is you could do a repayment plan. If you miss payments, talk to your lender about setting up a repayment plan to catch up. What they'll do is they'll spread it out over the missed payments over several months and make it easier to manage your finances without defaulting on your loans. The last thing you want to do is default. So to wrap it up, buying is a significant financial commitment, and it's crucial to go into it with your eyes wide open. Do your research, understand all the costs involved, and make sure you're financially prepared. And if you already feel strained, don't hesitate to seek help and explore your options. If you found this video helpful, please give it a thumbs up and subscribe to the channel for real estate tips and advice. And if you want to learn why maybe you should not buy a home this year, check out my video linked here. Thanks for watching. See you on the next time.